York Stock Exchange is just opening for cash trading, but let's first take a look at how other major markets are faring. European stock markets were lower as investors take stock of a week of central bank rate hikes and the latest from the banking sector. Asian shares were lower as lingering banking stability concerns continue to grip Wall Street. Bonds are also betting that the recent slew of rate hikes by central banks will be amongst the last of the cycle, allowing for policy relief in the year. In the U.S., stock futures fell as traders fretted over the state of the global banking system once again. U.S.-listed shares of Deutsche Bank fell more than 5% following a spike in credit default swaps. Credit default swaps are a form of insurance for a company's bondholders against its default.
Arise business analyst Bode Ososami is here to take us through the markets as the New York Stock Exchange opens for cash trading. Bode, thanks so much for joining us. What a week it has been. Do you think we have seen the worst in the banking sector, as regulators seem to be saying?
Well, looking at stocks, they're really opening on the back foot. Nasdaq is down 0.31. Dow 30 is also negative 0.37. And S&P 500 is also down 0.37%. Now, if you look at global stocks, the European stocks, they're even in worse shape. FTSE 100 is down 1.43%. DAX is down 1.97%. CAC 40, that's the French index, is down 1.91%. So clearly a negative sentiment playing. And apparently it's the banks, we understand again. Nasdaq down 0.42%, Dow 0.54%. And clearly it's starting on a very weak note. Earlier today, as the cost of insuring against Deutsche Bank, that's the swaps, the default, the cost of insuring against this Deutsche Bank default rose. Its shares were plunging as traders remain apparently less convinced about the stability of the banking sector, despite all the repeated assurances that the U.S. banking system is resilient, and of course in Europe as well. I suspect analysts have this lingering doubt that authorities are underestimating how bad things might get as fares shifted from the U.S. regional banks, still on the back foot though, to another struggling European giant, this time Deutsche Bank. I can see Deutsche Bank is down 10.8%, that's in the European stock exchanges, and down 6.84% in New York. So clearly, there is a suspicion that things are not doing so well. UBS is also down 5%, so Credit Suisse is down 6.3%. If you look at the other U.S. The regional banks, they are also not doing so well. First Republic Bank is down 3.88%. PacWest is down 2.5%. Western Alliance is down 3.14%. Moody's didn't help matters. They warned yesterday that there is a risk that regulators will be unable to curtail the current turmoil without longer lasting and potentially severe repercussions. So I think that is also adding to the negative mood. But if you look at Deutsche Bank, they made an annual net income of 5 billion euros in 2022. That was up 159% from the previous year. Their solvency and capital adequacy ratios are good. So why are markets jittery? So it's all about confidence. The mood is let's run away first, and then we'll look for what the problem is later. And certainly that hasn't helped. Also, TikTok, accused of spying and security-related misdeeds. This is pushing, as they push back against congressional onslaughts and all the angst that is bipartisan coming at them, even though 5 million small businesses are on that platform in America, which many Americans really enjoy. And there are also risks of Chinese retaliation. And that, of course, is just going to worsen sentiment. Many had predicted that risk watchers, that the major flashpoint for risk watchers in 2023 in the US will be China-US relationship, especially in the run-up to election. So today is looking sober, for want of an expression. Analysts are really not comfortable. Down 0.5%, Nasdaq, Dow 30 down 0.66%, S&P 500 also still down 0.63%.
Well, Bode, thank you so much for that. Hold on with us as we take a couple more business stories and come back to you shortly. The Eurozone manufacturing sector contraction deepened in March as the Purchasing Managers Index arrived at 47.1 in March, compared to 49 expected and 48.5 last month. This was a 4-month low. Services PMI stood at 55.6 in March, better than 52.5 expected, and February's 52.7, hitting a 10-month high.
In the UK, manufacturing PMI contracts to 48 in March. A negative surprise, and even services PMI in the UK comes down to 52.8 in March from 53.5 in February, also missing expectations of 53.
UK retail sales data just came in this morning at 1.2% over the month in February, much better than the 0.2% expected and 0.9% in January. The core retail sales growth, which excludes the auto motor fuel sales, rose by 1.5% month on month, also higher than 0.1% expected and 0.9% in the previous month. On an annualized basis, the UK retail sales dropped 3.5% in February, compared to a higher drop of 4.7% expected and minus 5.2% in January.
Multinational Investment Bank UBS has promised retention packages to wealth management staff in Asia at Credit Suisse. This is as UBS tries to stop talent from leaving Credit Suisse after the recent takeover. In a town hall address in Hong Kong on Friday, Iqbal Khan, UBS's president for global wealth management, also focused on boosting confidence and stabilizing the Credit Suisse Asia team.
Well, a series of U.S. lenders faced exiting depositors. The larger banks like JP Morgan, Citigroup, and Bank of America have warned employees not to make it worse by making disparaging comments about them or going after their staff. In a memo, guidance includes but not speculating about other banks or market rumors. JP Morgan, the nation's largest bank, told all employees they should never give the appearance of exploiting a situation of stress or uncertainty in a March 13th memo.
U.S. lawmakers at a congressional hearing accused TikTok of serving harmful content and inflicting emotional distress on young users. The hearing comes at a critical moment for the social media app owned by the Chinese tech company ByteDance. Lawmakers from both sides of the aisle quizzed TikTok's CEO on the safety of the app, how it collects data, and the company's relationship with the Chinese Communist Party. The TikTok chief insisted the company does not share user data with the Chinese government.
I understand that under Project Texas, business data and public data will be permitted to regularly leave the United States. Is that correct?
Almost all the data is under the that's not public, is under the definition of protected data. This accepted data that you mentioned, I can get back to your team on this, is really for interoperability purposes, to make sure that the business can still operate and American users are still getting the benefit
Well, can you tell us
of a global
what data,
platform.
where the data goes and how it's used by the company?
It will travel outside of the United States, but I can get back to you on the specifics. It's
Okay.
data that it cannot be used to identify users, so it really is data that ensures the interoperability of the platform.
The PRC developed algorithm used by TikTok, how does US data get fed by that?
The algorithm that leads to the US app is in the Oracle Cloud infrastructure and is trained by US and global data. Again, TikTok is not available in mainland China.
So you are migrating all storage of US user data to the Oracle Cloud infrastructure, and you think that that'll be done by the end of the year, was that right?
Again, I can get back to you on the technical parts of it. The migration today by default, all new US data is stored by default.
Sir, I'm just using what you said in your testimony in your opening here.
It is stored there by default. What I said in my testimony is I'm deleting legacy data. This is in Virginia and Singapore. That's the difference.
In the UK, the Bank of England's Governor, Andrew Bailey, has signaled there could be further pain to come for households as the Bank of England raised interest rates by 1/4 percentage point. Policymakers at the Bank of England increased rates to 4.25 on Thursday, a near 15-year high, and the 11th time rates have been raised in 15 months. Andrew Bailey also warned businesses to share the burden of inflation and not just pass on higher prices to customers, adding that inflation is coming down this year.
Terraform Labs co-founder Kwon was charged by U.S. prosecutors with orchestrating a years-long cryptocurrency fraud that wiped out at least $40 billion in market value. His indictment Thursday evening by the U.S. Attorney's Office in Manhattan capped a dramatic day that began with the news that Kwon, already a fugitive from charges in his native South Korea, had been arrested in Montenegro.
The UK Institute of Directors has responded in a letter yesterday to the Prudential Regulation Authority's consultation on the implementation of the Basel 3.1 standards. The proposals relate to the method of calculating the value of risk-weighted assets held by regulated entities and so affects the amount of capital that a bank needs to hold. The IOD wants to see a well-capitalized sector with a robust and well-evidenced approach to risk that can provide members with value for money, access to finance for investment, and working capital purposes, as well as day-to-day business banking services.
For more on this story, let's cross to London, where our RISE business analyst, Bode Ososami, is standing by. Bode, we just got the first set of Europe-UK PMI data in March. What are we learning from the March data?
Well, services was strong, especially in the Eurozone, but if you look at manufacturing, Germany unexpectedly fell to 44.4 in March from 46.3 in February, well below forecasts of 47. This was predominantly due to supplier delivery times, which surged to a new record high. Order books also fell at a faster pace, and outstanding business reduced significantly. Meanwhile, factory gate charge inflation slowed to its lowest level since January 2021. In the UK, manufacturing PMI also contracted to 48.0 in March. That's a negative surprise. And even services PMI in the UK came down to 52.8 in March from 53.5 in February, also missing expectations of 53.0. British retail sales was up in February, arrived at 1.2% over the month in February versus 0.2 expected. But February, that was February data. We are now talking of March. The data we're getting suggests that manufacturing seems to be struggling in all of Europe, including the UK. Although UK consumer confidence and data that came out today improved in March on better than expected economic forecasts. The Bank of England repeated even just today that it no longer expects a technical recession in the UK this year, adding that GDP was now expected to increase slightly in the second quarter. But I'm not sure these latest PMIs are enforcing this.
Well, Buddy, let's have a look at the response of the IOD UK to Basel 3.1. What are your thoughts on this?
Well, what the IOD is doing is trying to protect the small and medium enterprise companies that constitute most of their membership. And the way the capital adequacy calculations work, they've higher the value of the risk-weighted asset under the methodology. The more banks have to put capital aside, that of course means you're going to have a higher capital ratio. That's a barrier to entry, which leaves consumers with less choice and could lead to higher fees. And there are two areas that they specifically noted. There used to be a small and medium enterprises support factor that favored SMEs in terms of the capital that banks need to put aside. According to the consultation paper, there is no evidence that this is giving any value, and they want to abolish it. But they're saying the IOD are saying that they really need to still hold on to this factor. The other issue is how lending to businesses secured against a building is dealt with. And according to what IOD is saying, it seems the risk rating is higher for unsecured, for lending against a building compared to unsecured lending, we could, of course, encourage used-care lending. And the idea is saying that there is need to distinguish between proposals, between lending for an investment portfolio concentrated in commercial property and the risks associated with lending to a single fixed asset or a building. So I think the bottom line is any amendment that requires more capital cushions, this incentivizes credit expansion to that sector. And the SME sector is the engine of growth in most economies, and banks should be encouraged to lend to that sector, subject, of course, to evidence-based and prudent rules. And the IOD is concerned they may be overdoing it with the SMEs.
So, Bode, is there any point in UK's Bank of England Bailey appealing to businesses not to pass on higher prices to customers as rates are hiked?
Well, today, the Governor Andrew Bailey, he said there is no evidence that they are actually doing that, although all kinds of anecdotal references claim companies are unnecessarily raising prices. But he still thought it necessary to warn that if companies do raise prices and pass the inflation and all the higher input costs to consumers, that will lead to higher inflation, and that will also force the Bank of England to raise rates again. So you get this spiral. And Bailey had appealed that salaries should also not be raised, but of course that didn't go down very well with the unions. The bottom line is that he's also saying that inflation is coming down, and businesses need to factor that in their own forecasts and in their models. And the pressure to pass costs to consumers should recognize the fact that inflation is going down. And adding these costs really comes back to haunt them in other ways. The other thing is businesses are also benefiting from better business models, digitization, and all kinds of efficiencies. And some of these gains can neutralize higher input costs, making it unnecessary to raise prices.
Do Kwon and cryptocurrency, this cryptocurrency fraud, what are your thoughts on this situation?
Well, here is another 31-year-old Kwon arrested in Montenegro. Remember, 31-year-old Sam Bankman-Fried, extradited from Bahamas. They are all quite young, and my sense is when you look at what happened with Singapore-based Terraform's Terra stablecoin, which shook the crypto world last year. Terra was supposed to be a refuge from the volatility of other cryptocurrencies, but it came apart when Kwon's project evaporated in a few days in early May. The indictment cites false and misleading statements, misleading purchasers of euros of cryptocurrencies issued by Terraform, including Luna and the stablecoin. He also engaged in market manipulation, and it goes on and on. These bad eggs are young. Their values seem to be the end justifies the means, and they've made up their own rules and exploited the vacuum in needed regulation, motivated by financial success, knowing that markets do not reward ethics. They seem to reward profits. In the older days, my recollection is that the admired companies imbibed and formally embraced high ethical standards and integrity. They were not perfect, but they at least had strong ethical guardrails. And I think the crypto space needs to go back to this. Otherwise, the reputation will be so badly damaged. And more importantly, we have to find ways of assessing companies, or at least noting ethics in the scorecards that would balance the profitability focus. Otherwise, if markets continue to focus more on profitability, you're going to get these types of behavior. The other thing I must say is that these are criminals. Kwon was arrested in Montenegro. He was flying on a forged passport under false identity. So clearly these are bad eggs. And blockchain technology is very promising, a lot of promising positive applications. And regulators really need to come in and demystify the potential risks so people feel safe on these platforms.
Arise business analyst Bode Ososami, thanks so much for joining us on Newsday.